Jonathan Boyar, president of Boyar Research and also host of the amazing podcast, I should add, the World According to Boyar. It is so great to see you again and to welcome you on the show. Jonathan, great to have you.
It's great to be here. Thank you so much for inviting me on. I look forward to speaking.
I do too. And I got to say, I was listening to some of your podcast episodes, and I remember when you launched and we were talking about, guest ideas, and you have an incredible lineup. So folks who are watching and listening, do go check that out. But Jonathan, let's kind of start and get an intro, a bit of a background on you, your firm, your investment process, your research process, some of the work that you all do at your firm.
Sure. No, first, again, thank you for having me. It's a family-run firm. It was started in 1975. The firm was started by my father, Mark, who's still involved. And what we wanted to do was really just look for intrinsically undervalued stocks, and that's what we did. It was a research service that he started, predicated on intrinsic or private market value, not looking at what a company is going to earn next quarter or next year. And through the years, we've developed a good reputation in the quote unquote value investing community. And, since we started in 75, we grew and have an RIA where we manage money. It's a different entity, Boyar Asset Management. But we stay true to our value roots and our value style, and just try and buy that proverbial dollar for 50 cents.
When you mentioned the world of value investing, I should we met at at one of the Berkshire Hathaway annual meetings. So that's where a lot of folks, when you hear value investing, you often think back, to Warren Buffett and Charlie Munger and their investing style. I want to hear a bit more about the style. Does yours differ in any way from more of, value as to how folks think about it? Let's dive in a bit more, if you're open to it, about your own style of value investing.
Sure, it's evolved over time. When we started the research in 1975, it was more of like a Ben Graham deep value approach, buying mediocre businesses that were unbelievably cheap. And that was kind of the function at the time. I mean, at the time, calculators were the big technological advantage. They were really expensive, and you had to do everything by hand. So if you can find companies literally trading for less than the assets on its balance sheet, you could make a lot of money. Obviously, with the advent of technology, that's no longer the case. And over time, we've kind of done an approach where we look for value. We want to pay a reasonable price, preferably a great price for something, but the quality is much more important. And the fact that there has to be a catalyst is also equally important, because the one thing we've really learned, and my father has stressed over time, and we stress to the great team that we have at Boyar, is you can find the greatest stock in the world, but if it doesn't go up in price, it doesn't do you any good. So you have to find a catalyst, the reason for that stock to ascend in value. And I also, one thing I think it's worth noting is I really dislike the term value investing, because I don't think any growth investor wants to overpay for a stock. I think value investing has lots of different tents in there, and some of the names that we own or we write about, like a Watsco or an Uber or a PayPal, might not be statistically cheap, but they have aspects to that business that we think makes them, quote unquote value.
Yeah, I like that. You mentioned the lesson from your father. It kind of sounds like, some stocks can stay, I guess, I don't know if you want to say cheap for a long time. Like, you're looking for the catalyst. I want to ask you this, because it's, you mentioned the firm started in 1975 with your father. What have been some of the important lessons that you've learned from your dad over the years around investing, or even life, if you will?
Yeah, I think the biggest probably is patience. There's a lot of people trying to do instant gratification in this field, and you're trying to find what's going to beat the quarter, or that type of investing, and that's really hard. It's also not particularly tax efficient. There's lots of reasons why we don't do that. So be able to look at things over a longer period of time and say, what is something going to look like 2, 3, 4 years from now, I think is a heck of a lot easier than, what company, is good in the short term. So that's something that he's really instilled in me and instilled in the team, is to take that, patient part of investing, because, the analysis part is not, I mean, listen, it's hard and it takes work, but it's more the psychology and sticking through, times like this. I mean, today, it's what, March 20th, we're recording, Credit Suisse just got taken over or under, depending on how you look at it, by UBS. The world is kind of, financial world's in a little bit of disarray, but, be able to step back and take the 20,000-foot view, I think is really helpful.
You mentioned like the current events and, the Credit Suisse being taken over by UBS, and, and even going back to like last week, it was Silicon Valley Bank, Signature Bank, a lot of focus on First Republic as well here in the US. Let's step back and I want to get your assessment right now. Let's do your assessment of the markets, and also we can do your assessment of the economy. We can kind of separate the two. Would love to kind of, hear more of the big picture views from you.
Sure. No, and I'm happy to discuss. I mean, I think that's one of the big things, is I think the big picture view obviously is important, but it's not critical to our investment. Obviously, you have to have a view that the world's not coming to an end, and usually that's been a bad bet. We try our best to filter out the economic noise, all of what's going on in the world as best you can. Obviously, it's impossible to fully do that, and you have to be aware of what's going on, but you want to make your decision based on each individual company. And right now, the S&P is trading, roughly 17 times earnings or so. It's not particularly expensive. It's not particularly cheap. But if you look under the hood, there are a great many businesses that are selling significantly below our estimate of intrinsic value. And I think what investors really should stop doing is trying to stop figuring out, what is the Fed going to do next meeting or the meeting after? Are they going to cut? Are they going to hike? One, those are kind of unknowables. And two, even if you have that information, I'm not sure if you know how to profit from it. But so what investors, I think, at least in my opinion, should be doing is trying to figure out, are stocks cheap? Is there a margin of safety? What's the catalyst for a stock going up, instead of just being hyper-focused on, the events that are either happening in Switzerland or in Silicon Valley or whatnot. So I think that's one of the things that we try and do a little bit differently here at Boyar.
On the Fed part of things, I'm just thinking out loud here. Do you think, does it matter to value investors what the Fed does, or are value investors, are they paying more attention to the Fed in more recent years? Because I do remember over the years, just when I would hear folks in the value space, they get asked about the economy, and I'm not going to name names, but some of them would say, like, the macro doesn't really matter, or I want to hear more on that. Like, does it matter, or does it not matter? Why or why not?
So I think of course it matters, but it impacts everything. But you shouldn't let it, basically impact your decisions. There's been very few value investors that I know of who have been able to really meld well the macro and the micro together. The one that comes to mind, or the two that comes to mind, is Steve Einhorn as well as Leon Cooperman, who were at Omega, and they fantastic investors, and they did a great job of kind of melding those two. But it's a really difficult thing. So I think, as I said, people should be aware of what's going on, because it creates opportunities. And but I think you should just be focusing company by company and going that way.
Yeah. What do you do? What do you think of like this environment though? Like maybe let's start with like a sector even. What are your thoughts on, I guess, what are your thoughts on this banking crisis, if you will? What are your thoughts there? Do you see opportunity to play in the financials? What do you think?
I definitely see opportunity. I mean, I wouldn't go out and look at First Republic and try and bet on that. That's it. But if you look at, I think Andrew Barry, Barron's had a great piece this weekend on the big banks, and he had a lot, basically making the case why the big money center banks are cheap now, and I agree with him, and he couches it, and I agree that things certainly could get a lot cheaper, and so I think you should, you know, put your positions in slowly. I mean, you never know. It's really hard to kind of predict contagion. But I think that the big mega cap names like Bank of America and J.P. Morgan should do probably quite well over a 2, 3, 4 year period. And he pointed out something kind of interesting in the article. Basically, what he was saying after the 2008 2009 banking crisis, as well as after 2020, the KBW bank index, was up about 75% a year later. So, you're never going to catch the bottom, and investors should stop trying to do that. But if you can buy some, well-capitalized banks like a JPM or a BAC at reasonable valuations, I think you'll do well. And then there's other companies that have been, hit in sympathy, whether it's a Markel, which is an insurance company run by a really smart guy named Tom Gaynor, who I would, I think is, a good investor who should be able to profit from it. So there's Schwab, I think, has gotten unfairly punished. Have these names bottomed? I have no idea, but you're getting attractive entry points.
Right. And like you said, like no one knows, no one can like predict the exact bottom, but kind of going back to like your investing style of value investing and looking for catalyst. And maybe the catalysts are obvious, and my question's not a good one, but like what for you are some of the catalysts for upside?
In the banking sector or in general?
Could do banking and then in general.
I mean, I think more clarity on rates is an upside, and also more clarity on government intervention and just time in this. Right now, it's the market's being driven by fear and emotion, and that makes it a very difficult time for fundamental investors. But if you're not trading in and out, that's fine. And I think one of the things that's also worth mentioning that I really remember a few times where the consensus was, wow, this is a great time to invest. Everything's rosy, and you should go all in. And there's always a reason not to buy a stock, particularly banks. But if you look at after 2001, after 2008, both very scary periods of time, or 2011 after the sovereign banking crisis, investors did quite well in banking stocks and otherwise.
Mm-hmm. Are you buying right now?
Yeah, we're nibbling on things. We're not going all in, but we have our positions already, and then we're adding to them in areas in accounts that where it's appropriate. So we take an account by account, kind of mandate. But yeah, no, I think it's an attractive time to be buying, and but I would caution to do it slowly. Is what I've definitely learned since doing this since early 2000s is stocks can get a lot cheaper than you can ever imagine.
Yeah. You mentioned too, like the fear and emotion in markets, and also early in the conversation, you're mentioning like the, and I can look at my notes, because I wrote down, I think you were mentioning like the psychology of, having the psychology to stick through like the tougher times like we're going through now. How do you do that? Like, how do you separate the fear and the emotion? Is it something you can like learn over time how to do? Warren Buffett often has that maxim: be greedy when others are fearful. Yeah, that kind of thing. Maybe easier said than done.
Much easier said than done. I mean, I think I'm a contrarian by nature. You just ask my wife. I just, I try and, go against the grain. But it's it's not easy, but I've learned over time that in the general, if you're able to withstand the pain and you know what you're buying and you know the valuations of what you're buying, in the end, you'll be rewarded. Not every time, obviously, but I see no reason for a process that's worked so well for so long won't continue to work well. And you just have to, if you have confidence in your analysis, you should be fine, but you should also be humble enough to figure out, maybe you're wrong on something, and not just be, okay, banks are cheap, we should own them. You should also figure out, where could you be wrong, and always challenge your thinking.
Yeah, like how it reminds me of like Charlie Munger too, like putting yourself on the grills too and challenging your own thinking, as you point out there. You put out in January, you had your annual letter, kind of like framing up what we saw transpire in 2022, which was just painful for pretty much everyone, and kind of your outlook for 2023. Has your outlook changed at all lately, or what is kind of your outlook today?
Cloudy. My outlook is definitely cloudy. I'd say my outlook for 2 or 3 years from now, I'm pretty confident what's going to happen over the next 6 months. There's a lot of unknowns. Obviously, Ukraine, banking crisis, tensions with China. There's lots of things that could go right or wrong that we have to be paying attention to. Then you also have an election coming up next year. There's lots of different things that could go right or wrong. But I think over the next couple of years, stock will the market do well? I have no clue, but I do know that individual stocks, especially in the micro, small, and mid cap area, to me, those are the cheapest areas of the market and have the most opportunity. I think they'll do quite well. So while the letter does focus on the macro a lot, I find it interesting. I try not to let it kind of cloud my my investment thinking.
So I've had this conversation on the show a few times. A lot of folks are kind of gearing up for like this return to where like the fundamentals matter, and stock picking, and kind of the art of stock picking, if you will. Do you think we're there yet, or is that going to start to happen where we get back to just stock picking?
I hope so. I don't know. I guess that's the answer to that question. I have no I had no idea. I think it's a lot of people, especially who are fund managers, go and say this is going to be a stock picker's market. That's a little bit self-serving in my view, but I do think that at 17 times earnings, the indices aren't particularly cheap. So if you're going to do well, I think you're going to have to go outside of the mainstream, and you should do well. And there are a whole host of names, from a company called Topgolf that I find particularly interesting, Madison Square Garden Sports, the big banks, that I think investors should consider.
You just mentioned a couple of names, Topgolf being one of them. I would let's talk about some ideas,
Sure.
and how you find ideas in these environments.
Yeah, well, I mean, we have a research service, Boyar Research, that's our job is to come up with ideas during all environments, to come up with for our clients. I mean, that's what we're paid for, and I think that really helps our money management business, because it keeps us fresh and focused on new ideas. And it's just reading. I mean, there's no systematic way of doing it. It's just following these companies, getting to know them, and being curious. And something like Topgolf, which used to be called Callaway, it's Topgolf Callaway Brands, and I had the CEO Chip Brewer on my podcast a couple of weeks ago. Really interesting guy. Right now, it's being valued like a golf equipment maker, the legacy Callaway, but 50% of their EBITDA next year is going to be from Topgolf. So there's the catalyst there of an eventual re-rating of the stock. The stock has been hit hard over the last week or two, for two reasons. One of which I think is pretty silly. One, just small caps have not done well. Just has been a kind of a risk-off trade. But the second reason for it is the PGA, or the governing body, is thinking in 2026 that they're going to have different golf balls for pros and for amateurs, and that's going to hurt golf ball sales, which I think is a really dumb reason for a stock to go down like 3 or 4 points. But that's Wall Street for you. But Top Golf has a lot of competitive advantages. It's well funded. They did they're opportunistic. There's huge areas of growth, and there's a lot to like about it. So we look kind of outside the mainstream for ideas for our clients.
I'm actually not that familiar with Top Golf. That's not the same as like those entertainment golf venues, right? It's not the same.
No, that is. It's basically like kind of a nightclub meets
Like
bowling alley.
my husband likes to go to that thing when it's the driving range
Yes,
thing. Yeah, that's the same company.
that's the same company. Yeah.
Okay, sorry. That's kind of embarrassing. I don't play golf, but
No.
okay, I get it. I see like it's very popular.
And 50% of the people who go there are not golfers. So it's
Yeah.
actually a huge funnel to get people into the game. So, and they've said that I think 75% of the people after going to a Top Golf are positively predisposed to picking up golf. So it's, and they have, if you go to one, it's branded Callaway really well. So it's, it's a great, funnel for them, as I said. And, they also have something called Top Tracer, which if you ever watch golf on TV, it shows, how far the balls go and the angles, and they're putting them in various driving ranges throughout the country and getting licensing fees per golf bay. It's a growth stock at a value price.
Interesting. Okay, a growth stock at a value price. What else in the world of value investing is catching your attention these days? It's interesting.
As I said, the major money center banks I think are interesting if for those who are brave, but I would caution to be slow when doing that. In the media, I think Warner Brothers Discovery, David Zaslav has done a fantastic or is doing a fantastic job of delevering. They have great content, great IP. There's a big runway for growth. That's a name that we like a lot. And then in kind of the special situation bucket, Madison Square Garden Sports has an enterprise value of $5.5 billion. The Knicks alone, I think, are worth $6 billion. So you're getting the Rangers for free. So it's a no-brainer in our opinion, but you have to be able to sit through the pain that is the Dolan family.
Yeah. Well, by the way, I don't know if you're a Rangers fan. We're Rangers fans in this household. That game last night was wild, 7-0 total shutout. So just giving a little plug for the New York Rangers here. Yeah.
Yeah.
Crazy. I've never seen a hockey game like with that kind of score. It was incredible. I want to hear more about the MSG though play, because frankly, I know there's like a story at play here. I'm not super familiar with it. Can you walk me through like the thesis a bit more and the catalyst?
Sure. So right now for $5.5 billion roughly or so, you can buy the New York Knicks and the New York Rangers. Forbes value for the Knicks is $6 billion and change. Forbes value for the Rangers is $2 billion and change. Transactions in these spaces traditionally have been at significant premiums to what the Forbes value are. The Dolan family controls Madison Square Garden Sports, and Ranger and Knick fans do not like them, as do a lot of people in New York City. But over the long run, they've been good for shareholders. And if you've been paying attention to what's going on in Europe, especially, they're selling stakes or full teams, like soccer teams. And you've seen the Phoenix Suns were just sold, et cetera. So there's a real market out there. Private equity and sovereign wealth funds are allowed to buy pieces or entire teams. So I think what's probably going to happen and what's the catalyst is going to be is a private equity firm, and Silver Lake owns 10% of the public equity of it, will buy a stake in the team at a value that's significantly higher than the current share price. And that will help cement a value for what the Knicks or the Rangers are truly worth. So that's something that I think is particularly interesting. You just have to be able to deal with the Dolans, and you have to deal with, a lot of kind of uncertainty there. But for long-term patient investors, it should do quite well. And it's interesting if you look at the shareholder base of Madison Square Garden Sports. KKR owns a decent amount. The Bill and Melinda Gates Foundation owns a decent amount. The wealthiest Egyptian, owns a decent amount. He's an Egyptian billionaire who owns other sports teams. So there's a lot of very long-term patient investors in there.
What's the story with Dolan? James Dolan.
Yeah.
What's the story for like the person who doesn't know?
Yeah, no, it's sort of a New York thing, but it's more than that at this point. The Dolan family is one of the wealthiest families in New York. Charles Dolan, the father, started a company called Cablevision, and also was one of the founders of HBO as well. In I think early 1990s, they bought Madison Square Garden, which included the Knicks, the Rangers, the building itself, for a few $100 million. So like great buy. They eventually spun out Cablevision. I'm sorry, they eventually spun out Madison Square Garden and Madison Square Garden Entertainment, Madison Square Garden Sports from Cablevision, and sold Cablevision. So now it's a complicated like corporate action story, but essentially sports fans, New York sports fans, do not like him because they think he's a bad owner. Wall Street analysts do not like him because they think he's a bad owner. But over time, we found that he's done the right thing for teams. And if you might have been seeing some of the stories in New York about the facial recognition stuff going into Madison Square Garden, where he's actually not letting lawyers who are suing him, like entire law firms, go into the building using facial recognition software. It's created a big field day for the New York Post and some other like local tabloid. So it's a very strange situation, but from these crazy situations, we think there's opportunity for profits. But he's certainly someone people don't love to invest alongside of, but we had success with Cablevision. He sold it at the right time, and we think he'll sell all or part of the Knicks and or the Rangers at the right time as well.
Yeah. Okay. So you mentioned MSG. Mentioned like the big banks being interesting for those who are brave. What else is on the radar?
Well, we have the Topgolf. I think in the media space, Comcast and Warner Brothers Discovery are interesting. So there's lots of, through the market cap spectrum. We look at microcaps, we look at mega caps, and everything kind of in between. We're finding value. It's not just simply buying the market at this point.
Got it. Not simply buying the market, but finding value. You put out a list, your firm does, called the Forgotten 40. Can you explain like what this is? And I don't know if you want to give us a peek as to what's on the list, but I'd love to hear a bit about like what the Forgotten 40 is, a bit of context about it as well.
Sure. So we have this research service that's, we have for, institutional and high net worth individuals. And we come up with a certain amount of ideas a year, and they're normally, 2 to 3 year time horizon stories. But every December, our team, gets together and puts together something called the Forgotten 40, which it's our Christmas gift to subscribers, and, people buy it on an a la carte basis as well. And it's our 40 best ideas for the year ahead they're not our cheapest names, but they're names we know well that have catalysts, 1 year or less. Could they spin out a division? Could they be sold? One example that we had on this year's list was a company called Univar, which is a chemical company that we thought could be sold. And it was announced early last week that Apollo will be buying them. So that was a good win for us, which we were super excited about, which was great. So it's just, these are just 1-page snapshots, and people really like it because it's quick, to the point, and that they enjoy reading it. And it's just kind of a good reference guide.
Yeah. And I mean, can you give us hint on some names that are on the list?
Well, some of the, Callaway Golf, Modern Golf or Top Golf Callaway brand
Okay.
was on the list. I think, pretty sure Bank of America was on the list. Warner Brothers Discovery, those were all names that were on it. Those are our favorite ideas, or some of our favorite ideas at the moment. So that's, not surprising that they would be on the list. And that we have names that are a couple $100 billion, and I mean, couple $1 billion and a couple $100 billion. So it's we don't have any microcaps on the list, but that's kind of a separate thing that we do.
You mentioned, and probably everyone's like in this situation because no one knows what the future holds, but like also just kind of how things right now, when it comes to like your assessment of markets, the economy, like things are cloudy. You used the word cloudy. What would help give you more clarity looking forward? What would be some of those, I guess, catalysts, if you will, that would help you get more clarity on the markets?
I don't think you'll ever get, and I think it's a fantastic question. I don't think you'll ever get total clarity because something else is going to pop up. Obviously there's tragedy what's happening in Ukraine. Hopefully that hopefully that ends in a peaceful, good way for the people of Ukraine. But this economic situation with interest rates, et cetera, is going to be around for a long period of time. I think you just need some stability in stock price movements, and not have huge gyrations every day, and have 2 Sunday nights in a row where either the Fed or the Swiss central bank is orchestrating major policy shifts. So I think you just need some stability there. But I would be investing slowly along the way. As I said earlier, you're never going to get the high. Hopefully, you're never get the low. But you just you dollar cost average in there, and you should be fine over time.
Is there anything that we haven't brought up? I'm sure there's a lot of things, but in this episode that you've been thinking about lately, or you're you want to discuss things that I haven't asked you yet?
No, I think you've covered a lot. I mean, we talked about stocks that we like, and I do think that a lot of them can get cheaper, but there's a lot of good entry points. I think I want to stress that catalysts or have been and will continue to be extremely important to us, and to take that long-term view is really important. I think people are just so obsessed with trying to figure out what's going to happen at the next Fed meeting or 2 Fed meetings from now, and are not looking at the big picture. What do these companies look like, and can you find a company that has a good balance sheet so they can survive this difficult time, that are selling at reasonable valuations, that have catalysts for capital appreciation. So that's kind of what investors should be doing.
Yeah. I'm just thinking of things like that I've left off. I guess on this notion of like the big banks being a value play, what do you think about the future of, I don't know if you have thoughts here on the future of like the regional banks in our country?
Yeah, no, that's really interesting because they play a vital role, because there are certain things that JP Morgan and BAC won't do for clients, or risks that they won't take. So we need to figure out a way to make them survive, because I don't think it's in anyone's interest to have 4 or 5 big banks and no really regional banks there. So I think, I don't know what the solution is. I don't know if it's having uninsured deposits, unlimited insurance for deposits, or what it is, but something needs to be done to make it so it's a no-brainer for people to put money to regional banks, because at this point in time, when everyone's scared, they'll put money into BAC or JP Morgan because they think that's the safest place to be, and that's not a situation. You don't want people to have to think about the safety of their money. That's just not a good thing for anyone. So I would say that's something that they need to really focus on, and make sure that they don't regulate them to death.
Yeah. I do wonder, as like a Buffett watcher, if we'll hear from him soon.
Yeah, that's something that's really interesting. You haven't heard from him. You haven't heard from Jamie Dimon. You haven't heard from Brian Moynihan. All 3 people I'd love whose opinion I would love to hear right now about what's going on, and they've been very quiet, and none of them are shy about going on TV. So there must be a reason for it. And does Buffett do something? Does he? He was obviously very active in 2008, 2009, and then in 2011 with Bank of America. He's now 90 something years old, but he's still, there were reports that he was speaking with Biden administration. Who knows? I don't know if that's just the press being the press, or if that's actually, true. But it'll be interesting to see over the next couple of weeks what these people do.
Yeah, and those investments he made during the financial crisis and the firms, the stocks that you just outlined, he ended up making billions from those investments too. I remember writing that when he was finally out of all of those. Yeah, it'll be certainly very interesting. Do you want to let folks know where they can find you, follow you on social media, listen to your podcast, and also, again, if you have any sort of parting thoughts for the folks watching and listening?
Sure. If you go to BoyarValueGroup.com or follow us at Boyar Value, and you can listen to there, you'll be able to find our podcast. And it was a pleasure being on your podcast, and I look forward to listening to your next one.
Yeah. Well, Jonathan Boyar, president of Boyar Research and host of the World According to Boyar, thank you so much for being so generous with your time and your ideas. Thanks again, Jonathan.
Thanks for having me.
Hey everyone, I really hope you enjoyed that video. Be sure to hit that like button, the subscribe, and that bell so you won't miss any new videos.